So for those of you guys that are on, thank you for joining. Welcome to our PE Playbook. Our topic of the month is pet care. Excited for the next kind of 45-minute discussion here. Just to take a look at a quick agenda, we're going to start with some intros of our panelists, go into a trend discussion for the next, half hour, and then we'll do a live Q&A. So anybody who's on right now, you should be able to submit questions in the chat. I'm going to monitor that throughout, and then I'll kind of organize the questions and we'll do Q&A at the end for 10 or so minutes, and then we'll close out. So to get going with introductions, I'll start with myself. My name is Rachel. I'm Grada's Director of Relationship Management. I oversee customer relationships here. Been at Grada about 3 years, in the wider industry for about 7 years. Just a little bit about Grada in case anybody online is unfamiliar. We're a private markets platform, track data on about 14 million private companies and counting. So that's me. I'll turn it over to, I guess Alan can go first for his intro.
Great. Thanks, Rachel. Hi, everyone. My name is Allen Levitas. I'm the head of M&A at Village Pet Care. To give a brief overview on who Village Pet Care is, we're a pet care services platform committed to providing high quality, non-clinical pet care services in North America, which primarily consists of boarding, daycare, grooming, and training. Our company today has about 37 locations across 14 states. And prior to my role here at Village Pet Care, I spent the last 8 or so years, both within investment banking and private equity, more so on the healthcare side, having spent time at both Varsity Healthcare Partners, Linden Capital Partners, and William Blair. Great to be here.
Great. Thanks, Alan. Thanks, Rachel. Happy to be here. My name is Vaios Kouvelis, VP of Corporate Development and Strategy at Rarebreed Veterinary Partners. A little bit on Rarebreed. We're a veterinary services platform, just over 120 locations, kind of down the East Coast, full continuum of services. And so general practice, urgent care, and then also specialty and ER. Been a great run for us. Excited to keep growing along with Grada. Prior to joining Rarebreed, was on the private equity side, similar to Alan, focused on human healthcare. And here we are in the pet world, and so good to be more focused. And then prior to that was in the investment banking space at Lincoln International in Chicago. So excited to chat.
Awesome. Excited to have you both. Thanks for joining us. So just to tee off the discussion, we're going to start with kind of where the industry stands today. What we have is a quick screen grab from the Grada platform. This is talking about kind of fragmentation in the industry, a topic we're definitely going to touch on today. So this is covering the wider pet care industry. As you can see, about 78% of companies across all the niches in the space are privately held. That figure actually goes up as you take a look at niches like daycare and boarding, the grooming market, etc. So with that, I'm going to cut the screen share and we'll start with our first question. So on fragmentation, it's been a big topic in the pet care industry over the past couple of years. Where do you two see the industry standing today in terms of consolidation? And maybe I'll kick it over to Alan to start us off on this one.
Yeah, great. Thanks, Rachel. And the pet care industry, particularly within non-clinical services, remains highly fragmented. So I think veterinary care in general has seen some more significant consolidation over the past decade. Non-clinical services such as boarding, grooming, daycare, training, they're still largely composed of independent operators and small regional chains today. And I think one of the main reasons for that fragmentation, particularly as it relates to the non-clinical side, is really around some relatively lower barriers to entry. And I think it's less difficult for people to open up pet boarding or grooming facilities. The one thing that I will say regarding those barriers to entry, although they are lower, it is much more difficult to scale these businesses as challenges present themselves. Consistency in service quality, customer experience, brand recognition, it's really difficult to maintain that across multiple locations, which is why we now believe on the non-clinical side, there's a really large opportunity for continued consolidation in that space. And from an investor perspective, the biggest attraction is the ability to create efficiencies at scale for us. So whether that's through technology, shared operational resources, and regional density, brand loyalty, as consolidation continues, we're seeing more of these regional roll-ups with well-capitalized platforms that are expanding their footprint and generating economies of scale. And we're doing that at Village Pet Care as well, bringing operational sophistication to what has traditionally been a really highly localized industry. So really excited about both the fragmentation in our space, but also the consolidation opportunity that exists as a lot of these smaller, newer players find it more difficult to operate at scale.
Great. Yeah, and to piggyback off of that, as Alan noted, looking more at the clinical side of the industry, it's definitely more consolidated than what we're seeing on the daycare, boarding, and grooming side, and some other subsectors. But with that, we still think there's a ton of room for consolidation and still very highly fragmented. On the general practice side, which is your neighborhood veterinarian and kind of primary care equivalent for pets, we're seeing numbers as high as 60 to 70% of those kind of remain privately owned. And so still looking for a consolidator to partner with. On the specialty and ER side, which are your larger hospitals where you might take your pet for a knee surgery, or a more kind of specialized acute issue, only 25% of those are privately owned. And so much more consolidated on the specialty side, ton of room to go on the general practice side. In terms of platforms, huge wave of private equity investment, kind of across 2019 to 2021. 10 to 15 platforms have kind of achieved that 300 plus location scale, and probably another 15 to 20 are in that 75 plus range. And we're seeing a lot of kind of smaller and medium-sized platforms come to market, but a ton of room in terms of consolidation as we see those continuing to scale. I think barriers to entry, a lot of it just has to do right now with the cost of capital, and in relative acquisition pricing for an add-on acquisition in the vet care space relative to, whether it be healthcare industries or non-healthcare industries. It's a little bit more expensive in today's day and age to build scale, using debt capital, than it was in 2019 to 2021 when we saw much lower rates. Companies were levering to a much higher level, and amassing scale a bit more quickly. And so I think that's a bit of a barrier to entry on the platform side. But from the veterinarian side and call it the entrepreneurs in the space, it's pretty low barrier to entry, and there's a ton of demand and a big opportunity to build your own practice. And so we're seeing more and more, associate veterinarians, 2 to 4 years out of school, taking that jump and buying their own practice, pretty affordable kind of bank financing loans, and taking that jump and building out their own practice, which of course increases supply of privately owned clinics. So it's exciting to see it unfold, and a lot more to go.
Awesome. Thanks both. We'll do one more question, kind of looking backwards. The pandemic obviously impacted every industry out there. I'm curious your thoughts on how the pandemic impacted certain niches in pet care, any changes to deal flow that you've seen over the past couple of years.
Alan, you want to start or want me to?
Yeah, I'm happy to start us off. And so it's had a pretty profound effect on pet care in general. I think it widely varies based on the niche, and I'll continue to focus on the non-clinical side. I saw a key question in the chat just for segmentation, clinical versus non-clinical. The way on the clinical side, that's your actual pet care. So vet hospitals, whether that be urgent care, general practice, emergency medicine, specialty veterinarians providing healthcare services for animals. What our company is focused on more is the non-clinical side. So other services provided to pets. So overnight boarding, daycare, grooming, and training. So that's the segmentation that we're describing as we go back and forth between myself and Vaios. So on the non-clinical pet services, especially within boarding and daycare, I mean, the pandemic had a major hit in the early months of the pandemic related to those services, right? I mean, travel basically went to a standstill. So boarding businesses were seeing revenue declines, significant revenue declines, truthfully, overnight. But what is interesting in terms of what ultimately happened is that work from home arrangements became more long-term and new behavioral trends emerged. So we saw a massive influx of new pets coming into the market. My sense is I think 8 million new pets were added around 2020 to 2021 because people had more time to take care of those pets themselves. More people were adopting, and many of these pets are also experiencing separation anxiety as their owners are now starting to return to the office. So it's fueling demand now for daycare and training services as these restrictions and return to work are continuing to get lifted, and as things continuously change away from work from home and more towards return to office. I think in the post-pandemic world, we're seeing that new consumer behaviors are taking root. Again, pet parents are expecting higher levels of service. The humanization of pets is something that we always talk about. Pets are basically family members. So owners of pets want the best quality care for their pets, just full stop, right? So high levels of service, allowing them to be more flexible in terms of their booking options, having enhanced transparency around the services that are being provided. For example, having webcams in boarding and daycare centers so that owners can take a look at how their dogs are doing. Businesses that are adapting to these expectations are going to be the ones who will rebound the strongest. But again, initially in the pandemic, obviously a big hit to those services. I think we're starting to see a little bit more of a rebound as a result of more pets entering the market, and owners wanting the best care for their pets possible as they start to return to work.
Yeah, I think we've seen a lot of the same kind of long-term tailwinds coming out of the pandemic. More people working from home, huge rise in pet ownership. Allen, we've seen kind of a similar 8 million number in terms of new pets, kind of brought into homes. Those pets are now turning, 3, 4, 5 years old. When you look at the data of kind of veterinary care visits on the clinical side, pets tend to be the least expensive kind of after that first year in that 2 to 5 year range. And then they can be a little bit more of a cost center for their owners going forward. And so we're seeing a lot of tailwinds as some of those COVID puppies start to age into that higher clinical care part of their life. And something that we're hoping will kind of drive some volume into the clinic on the clinical side. But I think that pet ownership is also going to, have tailwinds for everyone playing across the pet care space. With those trends and also showing pretty good recession resistance through COVID, as I mentioned earlier, drove a ton of investment into the space. I think with that, we saw platform valuations for the larger sponsor-backed platforms kind of hit a high watermark. And with that, we saw add-on acquisitions it get a bit more expensive as well. The add-on acquisition side has since normalized a bit. Haven't been a ton of platform trades since kind of that pandemic impacted era. But we're continuing to keep an eye there. And just from a deal flow perspective, I think we saw a huge rise in deal flow kind of through that pandemic period, through the end of 2021, a bit of a slowdown, call it end of 22, 23, and even 2024. But we're starting the year here in 2025 seeing a ton of deal flow. I think driven by a mix of seller valuation expectations have started to align back with what buyers are willing to pay, as folks realize you're probably not going to see some of the multiples that you were seeing in 2021, but still excited to kind of find that partner for growth. So has been exciting to see the industry shift coming out of the pandemic.
Awesome. Thanks, guys. We're going to shift gears looking ahead now at what's kind of coming up in the industry. I kind of want to talk about opportunities. So is there any, innovation that you're seeing take place in this industry that you think could be exciting for investors to keep an eye on? And maybe we'll switch it up and start with Vaios on this one.
Sure thing. And unfortunately, I'm going to take the boring route here. So anyone who tuned in for like an AI answer here, they're not going to get it from me. And also, I don't think you want to hear me talking about technology and AI. But look, I think a big innovation here as we think about platform building and consolidators learning to operate has been that the operators are winning. And so I think that the veterinary services space, especially on the clinical side, started to get a bit of a reputation as a roll-up space where deal makers could win. Folks that didn't have that track record in operating a business and focusing on operational excellence, but instead on essentially stitching together a lot of smaller tuck-in acquisitions to create a platform. And so when I look at innovation in the space, I think it's finding ways and tools and leveraging that scale to help partners in the clinics and hospital leadership teams operate. There's also been a big shift to building out embedded capacity. And so kind of construction capabilities, expansion projects, service line expansions, and driving that organic growth engine within the clinics that you've partnered with, versus hammering the ground with 20 to 40 person M&A teams, and building a business through deals. And so I think as we think forward in kind of the industry, I think investors should continue to focus on finding great operators that can partner with clinics, and help them grow, versus just being kind of deal first in mindset.
Yeah, I completely agree with you, Vios, especially on the operating excellence. Like, I think a lot, both across the pet care world, I think a lot of people are focusing more internally to really make sure that that operating engine is optimized, truthfully. Like, making sure you have the right operating playbook and you're efficiently running your businesses that you own so that they can run seamlessly. I'll take a little bit of a technology approach. There is some innovation going on. It seems like there are continuous ways in terms of integrating technology into these businesses, as well as making these services more personalized. That's going to result in potentially some higher both customer satisfaction, but also retention. So for us specifically on the technology integration side, there are a number of booking and customer engagement platforms that are out there that are really transforming how pet parents interact with service providers. So making sure that you have a seamless digital experience, which I think customers kind of expect at this point in terms of being able to do, for example, mobile booking, real-time pet updates, automated reminders, being able to push notifications out via technology to your existing customers. I think that'll drive a material amount or higher retention of your existing customers, but also drive better satisfaction, and more transparency with the customer. Again, on the non-clinical side, like, quality service is top of our list, and being able to continue to push those updates through to customers is going to continue to be important for us. And then the other piece is really around like personalized and really thinking through like pricing from a subscription-based service perspective. So pet parents are seeking customized care solutions, breed-specific grooming packages, potential tailored nutrition plans, although that's not much of our focus, subscription-based daycare memberships that match how they like their return to work, right? So depending on how many days a week you need a dog in your daycare, being able to kind of set it and forget it and pay a membership rather than paying every single time that you come into a location. Businesses that are providing that type of personalized experience, I think will continue to have a competitive advantage. I think both of those trends on top of the operating excellence that Vaios described, is really going to present opportunities to both retain and grow your customer base.
Awesome. All right. Kind of staying, on the topic of opportunity, we've talked a lot about how, Vios works for a clinical focused pet company and Allen's kind of on the non-clinical side. So I kind of want to talk about specialization. Do you guys think that this trend of, companies like yours specializing by service offering, is a good thing? Do we expect this to continue? Is this kind of a new diversified way to look at, investing in this industry?
You want to
Near
start?
you, Vios.
Yeah, all you. Go for it.
Okay, I'll kick us off. In my opinion, I think specialization is where the industry is generally heading. To me, I think these operating models are just fundamentally different between clinical and non-clinical. So, and Vios can get into this more on the vet side, but vet clinics are operating like medical practices, right? You require licensed professionals, there's stricter regulations, more appointment-based scheduling. I think pet services, on the other hand, are more customer experience oriented, hospitality oriented, a little bit more discretionary, truthfully, in terms of the type of services that are being offered. And I think trying to combine both of those can really be dilutive to what we were talking about earlier in terms of that operational focus. So by having a specialized business, you can refine your processes, optimize labor efficiencies, right? Implement best-in-class technology tailored to your specific line of service. Those, I think that people or organizations that are able to master their specialty, whether it's call it boarding, grooming, and training versus clinical services, will be able to achieve that operational excellence faster and have better long-term success.
Yeah, completely agree. I think there's a ton of value in specialization, and I think for pets, pet parents, and consumers and employees, there are a ton of benefits. On the pet side, just to paint a bit of a picture on the service side, if you looked, 30 or 40 years ago, your neighborhood vet was kind of doing it all. They had exam rooms for your annual visit. They had daycare and boarding set up, and so hey, take your vet in for the annual check-in, and then if you're going on a trip, you can leave it here. And so we've seen a ton of value in just creating a better and more thoughtful consumer experience, having the clinical players focus on what they're good at, and kind of to the highest point of their license. And then having other companies like Village Pet Care and other groups focus on that boarding, grooming, and daycare experience. And so I think there's a lot of value on the clinical side. When you think about general practice and urgent care and specialty and ER, once again, those kind of the last generation of veterinarians used to do it all. And so a lot of more complex surgeries, older vets would feel more comfortable doing. We've seen a bit more of a specialization where there are platforms and individual hospitals focused on those higher acuity, complex cases that need a boarded specialist that's residency trained, just like a human doctor. And we're seeing more of those cases shift into that specialty and ER setting versus the general practice setting in which they used to be cared in. Overall, it's creating better outcomes for pets. Pets are living longer, being able to be treated for some of those more complex cases we didn't have a solve for in the past. And so I think we'll see that continue.
Awesome. So my next question, this may be quite a different answer, I think, for the two of you, but I wanted to talk about challenges in the industry. Labor and staffing is something that has come up before as a challenge the industry faces. How do you guys see that changing 2025 and beyond on your, various sides of this industry? And if that's not a challenge, is there any other challenges, that you think the industry is facing?
Yeah, happy to start us off. I like labor continues to be probably one of our biggest challenges within pet care, right? Improvements are being made, but I think staffing will continue to remain a critical factor. So there's a shortage of skilled pet care professionals. Companies are really trying to adapt in how they think through recruiting and retention of their staff, right? So thinking through ways in which you can offer more competitive wages and benefits, right? It's more easily, you can more easily attract and retain talent in that way. And I think the unique part about about the pet care space in general is that you do have a little bit more flexibility on the pricing side as well, in order to try to maintain margin sustainability. And we're noticing that turnover continues to be a challenge. So having to debate higher wages versus potentially trying to figure out if you're able to take a little bit on price, that's a continuous back and forth that we continue to have internally. Also, outside of just wages and benefits, right? Like on the retention side, I think people are focusing around opportunities to be able to help on the career development and training side. So companies that are investing in training and clear career progressions are seeing better employee retention. And I think that's an opportunity for a lot of companies within our industry in 2025 to implement in order to try to keep more of their employees in-house. And then lastly, again, a little bit on the tech side, but there are some automation and efficiency tools as it relates to the pet care services side, self-service pet wash stations, digital check-in, potentially even AI-driven scheduling tools that are starting to come out there. It does improve your productivity and you can maintain high service quality. And that's a way in which you can kind of mitigate some of those labor challenges. So I still think that labor and staffing is probably the most difficult part operationally of what we're dealing with. And there are a number of ways that companies are trying to address this moving forward, but those who can prioritize employee satisfaction, leverage technology, they're going to have a significant advantage moving forward.
Yeah, all great points. I think when we relate to the pet care space on our non-veterinarian labor, the focus is on retention, right? It's lower wage employees that you're focused on, keeping the retention rate as high as you can and minimizing disruption there. On the veterinarian side, it's a big impact, right? Those are your producers, those are your revenue generating people. And our COO and talent acquisition team, for sure, the first thing they wake up thinking about, and the last thing they think about going to bed is retaining those veterinarians. To Alan's point, I think career development and giving people a ladder to grow within the network, whether it's within the four walls of their location or giving them an opportunity to move to a different care setting or hospital, is a great way to drive retention and increase employee satisfaction. Another tool that we've been really focused on at Rarebreed is equity incentive programs and giving people paths to ownership. And it's a way that we can combat some of those challenges of hiring through driving a really good retention rate from our existing provider base. And so. Yeah, don't know if it's going to be necessarily a challenge and not to the level that we saw in kind of that post-COVID period. But it's definitely a huge operational focus as you think about scaling a multi-site pet care business.
All right, thanks, guys. We'll do kind of one more question that we have prepared, and then we'll take a look through the Q&A. So if anybody has questions to submit in the next couple of minutes, feel free to do so. So my last kind of question I have prepared for you guys is a bit of a rapid fire one. Any predictions on big winners or losers that you expect to see in the coming years in this industry?
Go ahead, Vaios. I've been taking the
All
mic
right.
first on the past couple.
All right, Rachel, I'm going to give you three winners and three losers here. Starting with the winners, I think it's well-capitalized platforms with a healthy balance sheet. This is a great market to do deals in. There's a lot of privately owned businesses looking for partners. And so keeping the balance sheet healthy, keeping leverage low, bringing in a new equity investor puts you in a really good spot. Two is sellers looking for a thoughtful growth partner. I think those deal first platforms are going a bit out of vogue, and we're seeing a lot of consolidators really focused on creating playbooks for partners to grow their business and participate in that upside. Third is Grata. Proprietary deal flow, immensely valuable in today's market where there's so many brokers driving up the price of add-on acquisitions. And so Grata is a great tool to meet some of those privately owned sellers without having to go through the traditional channels. Losers, deal first consolidators. I'll say it again, operators are going to be the long-term winners in the pet space. Digital dinosaurs, to piggyback off of Alan's point, we're moving away from paper records. There's more patient engagement with technology tools. And so the best companies are leveraging those new technologies to win. And then three is investors that are missing out on the space. Get in on the action. Ton of room to go here. And so that rounds out my three winners and three losers.
And I promise I didn't put you up to that answer.
That was all me.
Wait, can I revise my answer really quickly before I give mine? Okay. I agree with a lot of what Vaios said. Again, it's going to be a fairly exciting and active M&A market in the pet care services space. So I think in terms of big winners, really like consolidation in general is good. It's continuing to be in the early stages. Those, as Vaios mentioned, who are well capitalized are going to be able to take advantage of the fact that there are a ton of opportunities that are coming down the pipeline. So well-capitalized consolidators. And then at some point, I think we're ultimately going to see, maybe not this year, but a trend where you're going to see consolidation of consolidators as more of these consolidator businesses get to a point where they can then start to consolidate each other, which I think is really exciting for this industry as a whole. The only really thing that I'll add on the winners side is that those who are continuing to be operationally flexible and open-minded, right? I mean, I mentioned it before, but there's a ton of innovation happening across the world as it relates to just tech and how it can be implemented across a whole host of industries. I think there are a number of opportunities that technology can be used to be leveraged in our business, both operationally as well as a business development perspective. Grata is a great tool exactly like that. And being able to utilize technology is going to help you become a winner, right? So I think like if you're able to be well-run, scalable, and positioned for growth, those are the ones who are ultimately going to be winners in 2025. And on the loser side, again, it's just those who will fail to evolve. So on the single location operators, if they're unable, they're less capitalized, right? They're unable to invest in modernization, customer retention strategies. They may struggle to compete in a more professionalized market, especially on the pet care side that's becoming more and more professionalized every single year. So businesses that are going to resist those industry trends, digital booking, premium services, employee retention strategies, I think they're going to be missing out. Which is a great opportunity to be acquired by a consolidator like Village Pet Care. So I'll throw a little plug in there for myself too. I think the next few years will be a dynamic M&A environment. I think those who focus on that operational excellence and scalability are going to be best positioned to succeed.
Awesome. Thanks, guys. Got to go with the shameless plug in there. All right. So we're going to move into Q&A. Lots of good questions in here. So I'm just going to pick out a couple that I think are good discussions kind of across both sides of the industry here. So I'm going to start with the geographic one. So there's a question here saying, which geographical markets should pet care investors pay attention to in the coming years? Anything that stands out to you guys?
I can start here. Yeah, there's definitely there's region specific trends to keep an eye on for sure. I think an obvious one is the cost of labor in different markets. You could see 10 to 30% swings if you're looking at a clinic in a rural area versus a clinic or location in New York City. The other piece are big P&L areas to keep an eye on. One that we see is rent, for example. A clinic that's in a secondary or tertiary market, rent might be running at 3-4% of revenue. If you're owning and operating a clinic in New York City, that number could be 9 to 10%. And so you're looking at 7 points of margin that you're going to have to make up elsewhere if you want to be running that clinic in line with others. For us, a big one is demand. Just looking at pet demographics, affluence of consumers and household income. And you'll see in some markets that don't have as strong a demographics, it comes across as lower volume in the clinic, lower average spends, and in a space where we're price setters and not price takers, that ability to pay is important to keep an eye on.
Yeah, completely agree with all of that. I think the general correlation that I've always seen is that if you follow where the population growth is, those are going to be the most attractive MSAs for you to go into. So if I'm seeing higher than national average population growth within a geographic region, those are the areas that I would want to prioritize as it relates to where to expand. And truthfully, we're seeing a lot of migration towards the Southeast. And South and Southeast. So from a geographic perspective, I think that's going to be a really nice opportunity where you're going to continue to see people moving to those locations and demand continuing to increase. To Vaios's point on the labor side, I think there are a few states that are just really difficult to operate from. And not to throw any shade at anyone who may be from this state on this call, but California is a state that I think we have just wanted to stay away from entirely. I just think it's a really tough operating dynamic and a really difficult labor environment, as Vaios mentioned. So I tend to try to move to where population growth is. And then Vaios hit on all the other key facts, right? Like pet ownership, average household income. And interestingly, we've also seen millennial population. So what percent of the population are millennials? Because those are the people now who are at the point in their lives who are also deciding to add pets to their household, and who are also at a point in their life who where they're more willing to spend their discretionary income on taking care of their pets.
Awesome. All right, there's another one in here. We spent a lot of time, clearly talking about your niches, clinical and boarding, grooming, and all of that. There's a question here about pet product manufacturers. Any, thoughts on trends that you've seen with the manufacturing side of the industry?
I can start. I'll caveat this is pretty far outside of obviously what we focus on the services side, but a big trend that we're seeing is that would of course would be relevant to a manufacturer is that less products are being sold out of the clinic. There's awesome online channels for consumer experience. Chewy comes to mind. Chewy's having a similar effect on the space as Amazon is on other kind of product manufacturers and distributors. And so you're going to see probably a more concentrated channel in which that you can sell those products versus historically, selling out of a retail space or out of a veterinarian's office. And so that's something we've been focused on. We're seeing similar trends on even the pharmacy side, that a lot of that kind of drug flow is moving out of the clinic and onto online channels. Um, that's probably, I mean, as far from the services side as what we see on the product side, but I think a big consideration to keep into account that products are going to be sold kind of in that uniform channel, whether it's Chewy or if, Amazon buys Chewy one day, and it's going to be a lot more concentrated and kind of a competitive marketplace that the consumer is going to be looking at those through.
Yeah, not much to add. It's not as much of a focus area for us. There is some retail that we sell within our stores, although it is a pretty small portion of our revenue today. And really for the points that Vios was hitting on already, in that most people are deciding to make those purchases online. I think, I mean, just speaking from my own personal experience, I think on a pet product perspective, I think there's more of a shift towards continued premium products, right? So even on the pet food side, you're seeing these companies like the Farmer's Dog and others who are creating more healthy, tailored food plans for pets, and a lot of pet owners are looking for more personalized premium product offerings for their animals. Um, I am saying that truthfully just from my own personal experience, but that as well is probably the extent to which I can provide a lot of commentary on the product side. We sell a little bit of it, but I think people are looking for more personalized premium solutions than they have been in the past.
Awesome. This next one might be a question probably geared towards Vios's side. Any views on membership programs at vet clinics that these are becoming more popular?
Yeah, it's a great question. We've seen it, I would say, across the industry. It's become really popular for the de novo models that are appearing, and so Good Vets comes to mind, as well as some of the other platforms that have built instead of acquiring their scale. And so that's where you see a more branded approach, right? When we go out and partner with new clinics, we keep their local brand in that market. Um, but if you are walking around New York City, you're probably going to see a lot of Bond Vet locations. That's a de novo platform. Good Vets, I know here in Denver, has popped up pretty quickly. There's Sploot, and a number of other businesses. Some of those businesses have created a wide variety of membership programs. I think it's varied from kind of a monthly fixed cost to use some level of their services kind of within that cost. Others, I think, have taken a little bit more of like a concierge and preference approach, to where you can pay a little bit to, maybe get into the clinic more quickly and avoid wait times, or get kind of special side services added on for the cost of that membership. I think it's somewhere we kind of refer to them as wellness plans. I think there's a huge opportunity for wellness plans to increase kind of consumer purchasing power. And I think what we're looking out for is how those are going to coexist with insurance packages. Insurance packages have a similar effect in that consumers are buying them to be able to afford higher acuity treatments, and kind of mitigate some of that cost that you can be exposed to as a pet owner. And I think there's going to be probably a way in the future that wellness plans and insurance plans are going to coexist to create, call it a smoother cost life cycle for the pet parent throughout the life of that pet. And so ton of different models being tried out. I don't think there's one that's been widely touted as the best of them, but definitely something to keep an eye on, and somewhere that I think, at least on the clinical side, we're going to go towards.
Awesome. Maybe we'll wrap it up with one last question and then we'll do closing remarks here. So, very last question. We talked a lot about specialization. Vios mentioned how a lot of these services are moving out of the vet clinics. Um, do we think that that's good for the consumer? Any impact that, to the typical pet owner? Do prices go up, but there's more options? Any thoughts there?
Yeah, I can hit on this one a little bit. I don't think this is really there's definitely a supply demand dynamic within vet care and that is occurring in which um there's definitely more pricing control there. I think the number of options that people have on the pet care services side is pretty plentiful, at least compared to what you're seeing in terms of supply demand dynamics with veterinarians specifically. I think you have and Vios can hit on this a little bit more, but there's a supply constraint in terms of veterinarians that you don't see as much as it relates to employees that have to operate within on the non-clinical side. So I think there's a little bit, truthfully, I think a lot of the vet clinics that are providing these types of boarding services, it's almost viewed as an afterthought for them. It's not a large revenue generator for them. And the type of service that they're providing from the boarding side is not high quality. I think they're basically saying, hey, we can if you decide that you want to leave your pet, we can hold them overnight, but like you're not going to have a big play area. You're not going to have the outdoor space that's fenced off that to allow your dog to play. We're not going to have webcams, so you can't check in on your dog. We're not going to have the add-ons of different treats, and you like there's just a different service model between the clinical and non-clinical side. So I think it ultimately benefits the consumer in that they're going to be getting higher quality services and more specialized services if they decide to go to a clinic to get actual care for their pet or go to a boarding or daycare center to drop their dog off for the day and know that they're being taken care of.
Yeah,
Awesome.
that I completely agree on the pet care side, Alan. On the clinical side, it's a great question. I think that's been a lot of industry pushback as we've seen the shift to more of these specialty and ER locations, and that what if I don't want to go spend $10,000 to have my dog's ACL repaired, and completely understand where most consumers are coming from there. I think urgent care, as an example, has been an interesting kind of test case on this, where you used to have to go to the ER and you might spend $1,000 to $5,000 to see what's wrong with your pet that might be vomiting or have porcupine quills, and some things that can be scary as a pet parent, but maybe not as high acuity from a veterinarian's lens. Urgent care and even kind of GP plus type models have created actually more affordable settings in which to get those cases treated. And so I think it's created, similar to what we see kind of across the industry, it's created just more options for consumers at different price ranges. If you're someone that wants the best quality care 100% of the time, there are settings in which to pursue that. But urgent cares and other models have started to offer very convenient solutions at call it half or less of the cost that you would pay in an emergency setting, in which you can get your pet treated. And so I think more options tends to create better outcomes and more flexibility for the pet owner's kind of cost journey. And we've been really focused as a business on making sure that people have options at their price range, versus pushing them to something that might be uncomfortable from a price perspective.
All right, thank you guys. That brings us perfectly to time. So thank you, Vaios and Allen, for joining and sharing your thoughts today. And thank you to our attendees. Pretty much everybody stayed on the whole time, so we must have been saying some interesting things. We will send out a recording after this to anyone who missed it and anybody who did attend in case you want to go back and review anything. Vaios, Allen, any specific way you'd like people to reach you if they have follow-up questions?
I'll start. Yeah, feel free to shoot me a connection request on LinkedIn or reach out to me through that. Can also reach me at my work email, first initial V and then my last name Kouvelis at rarebreedvet.com. Feel free to reach out. Love connecting with people interested in the space or other operators in the space. And so looking forward to it. Inbox is always open.
Same here. Please shoot me a LinkedIn request. And if you have any acquisition opportunities or just want to get in touch, we do have a broader email address, info.acquisitions@villagepet.com. So everyone, please contact us. We would love to get more opportunities through the door. And if you don't have an opportunity, we'd still love to connect and get to know each other better.
Awesome. Thank you, everybody. Be sure to also follow Grata on LinkedIn. We'll have more PE Playbook webinars coming up. So with that, have a good day. Thanks, everyone.
Thank you.
Bye.